Yo, what's up? It's Mark from Digital Dash. It's been a minute, but the market's back moving again. I want to come and update y'all, fill y'all in on what's been going on. Recently, it hasn't been the most ideal conditions to trade the way I trade. Back here earlier in the month, end of December, January, I was really struggling. And that's a bad time to try to trade anyway, but I definitely was struggling. I was trading less back then. I was having more losers. And I want to just talk about just the mental aspect of trading and the difference it is when you're in a good mental space and when you're in a bad mental space. Really, nothing changed from this range to the range that we're seeing now. But right now, a lot more money is being made. The market's moving a lot better than it was before. And the mistakes we made the last time we were trading a range are being implemented this time. So now everything's making sense and everything's clear. We're going to start by looking at the higher time frame and talking about the recent price action. And then I'm going to talk about what was happening before. Or actually, let's look at before first to give you guys context. So clearly, we were trading the range since like December before Christmas. We've been trading between this little range here. And then we didn't break out of it until the beginning of January when we finally started moving higher, right? So cool. Give you guys context. If I zoom in on the lower time frame, we have a range, right? When you're trading supply and demand, when you're trading ranges, the whole point of it is to sell at the top of the range and buy at the bottom of the range. It is what it is. I'm gonna place a box over here. This is a green box. Let's see. I'm gonna make it gray. So it makes sense if you get tricked out in this area, right? But once you see that the range is established like this, you should only be looking to take sells up here in the red box and buys down here. Again, if it's back here before you see any range, because it was trending price action, right? We can expect moves down. We want to see price continue to move lower. Then it started ranging. So once you see that the range is established, that low is put in and that high is put in, and prices is not breaking out of it with following through when it breaks past either of those points. When it breaks past a high, if it's failing to follow through and push higher. When it breaks past a low, it's failing to follow through and push lower. Then you see that the range is established. If you're taking buys in the middle of this range or you're taking sells in the middle of this range and it snaps up and stops you out of your sells, that's on you, man. That's how it ended up being for me. I was playing in the middle of the range and I knew this. Every time we change market environments and we go to a consolidating market, I struggle with this, and that's why I have so much data on it and so many notes on it from the past. I know I shouldn't be buying in the middle of a range, but I might be on a lower time frame. I might see something. I mean, I might miss my chance to buy at the bottom or the top of the zone. So now I want to get involved in the middle and hope this is the time that it follows through to the top of the range or the bottom of the range. You sell at the top of the range, you buy at the bottom of the range. You may only get a few opportunities. That's why you put on risk and accept the risk. We get to the top of this zone. You can go ahead, you can put your entry there, accept your stop, put the stop on and accept it. You're gonna hold it till you get to the bottom of the zone. In this case, you started selling up here, you accepted the risk, price never pushed into your risk, price never took you out of the trade, it never invalidated the zone because this is clearly a range. It's ranging, it's failing to push higher, so that's why we're selling here in the first place. And then it goes down to where you buy at. Now the same thing. If you would have bought immediately at the zone, you would have sat into a little bit of drawdown. Cool. Down here, you put on the risk, you accept the risk, you take it to the top of the range. All right, so knowing that's how I'm supposed to trade. When it's ranging conditions, you have to buy at the bottom of the range, sell at the top of the range. I'm knowing that. So now that I reflected all weekend, went back into my notes, made new goals, made new areas to stick to for this week, reviewed my trading. Now I'm going in knowing when you identify ranging conditions, you have to put on the risk, you have to put on the trade, you have to buy at the bottom of the range, sell at the top of the range, and you just have to implement these things if you want to find success. So we finally started breaking out. When we started taking out zones, that's when you can recognize the conditions changing. So that's something I started implementing recently too. Combine that with market structure, and you're getting a better direction of price and what side of the trade you need to be on. Started trending upwards for the most part. Then this is when we started getting choppy conditions again, and this is when you have to identify that. Friday put us in a nice scenario. Friday kind of created the bottom of this range and put in those lows for us. Monday, nothing much happened. With it being MLK Day, it was a bank holiday. Wasn't much liquidity in the market. Wasn't much volume in the market. So it was kind of moving sideways. Identify that. those conditions changing. That's one thing you got to do. Then establish your range. We had a huge supply up here on the daily. And usually I don't like drawing zones this big. That's why I have these smaller zones all the way at the top, these more refined order blocks. The selling pressure up here was so strong that I didn't want to ignore it and just say, oh, it's not going to happen until we get up here back up at 41.46, right? I wanted to acknowledge that it was here. And in this case, it's been active. But we established the range. We established the top of the range. Luckily, we had another imbalance that was so strong. It created a zone within the zone. So this is another supply zone that was created. And once we saw this, we were officially able to say that, okay, this is a range, right? It was already a range before, but now selling pressure came in so strong here that this gives us a confluence that this is another area to look to sell from or to target if you have buys. So that's what we did. Price came back into the bottom of the range. I had the limit order right here. We missed it by a quarter. Came back down eventually, triggered this into the trade. Once we missed it, I said I'm going to move it. I don't want it to go into supply and then break past it. So I moved it down a little bit more, got triggered into the trade, held it overnight. This is an aftermarket trade. I usually don't trade after hours, but I'm just trading the setup I see. Held it overnight, woke up this morning, had the limit order to get us out. Got us out of the trade. Cool. Now today, everybody's making so much money off these puts, and it was just a beautiful play. I wasn't able to, unfortunately, I missed out. I'm not gonna lie. I missed out. I'm kind of sad about that. But the play was just taking this zone that was so strong and created this massive imbalance that we bought from and just buying puts there at the top of the range. We just sold at the top of the range, right? If we're here in a range, we're buying down here and we're selling up here. That's all we did. But we came in with more structure. We came in more disciplined than last week because we went over our notes and we got our psychology right. So that's all it is. That's all everybody did. Now you're seeing the market start to change. You're seeing demand zones get taken out. You're seeing demand zones get invalidated. You're seeing breaks in structure, right? Changes in character and breaks of structure here. So you're getting new, fresh supply zones being created and demand zones getting taken out. So you can start seeing more moves to the downside. But yeah, that's just the importance of, it's the same thing. Trading is going to be the same thing. When you have a strategy you stick to, it's going to be the same thing. You just have to stay consistent in your execution and stay consistent in the rules. So it was very difficult for me. I wasn't following my rules, doing stuff like trading in the middle of the range. And once you just review and go over your things and look at what works in the past you understand what you should be doing, then you'll come back and the trading will be a lot better. And you just gotta stay doing that over and over again, over and over again, over and over again. You're gonna have a loss too. Like, you're gonna lose. So you can't beat yourself up about the losses too much. You just gotta be able to pick those apart and understand, like, all right, this is how we come in the next day, or this is how we come in the next week, and just make sure everything tighten. Make sure everything proper and approach the market the right way. But I don't want to make this video too long. Like I said, I'm gonna keep y'all updated, get back on my grind, and I'll catch y'all in the next one.